How's it going, everybody? This is BeatTheBush. Today, I'm going to talk about the stock market, and obviously the past few weeks it has not been doing very well. However, you might think that some companies will actually increase in stock price during this time because they're getting more business right now. Before I begin, I have to give the proper disclaimer that I am not a financial advisor, that these stocks I'm going to talk about, they may go up or down in value. This is not a recommendation to buy or sell these assets. If you guys are interested in investing yourself, check out my Webull referral link down in the video description below, where if you sign up, you can get a free stock. If you deposit $100, you can get yet another free stock. Now, the first one I want to talk about is 3M. 3M makes N95 masks. They're one of the very few producers that makes these masks. So in the beginning of this situation, you might go, oh, 3M, they make these masks. Therefore, I should just run to this stock and just load up on them. But I did not buy into 3M because I have my past experience of buying into Sony because I thought, oh, PS3s are great, I should just invest in the stock. But it turns out that Sony is a really large company. They make a whole bunch of other goods such as high definition TVs, they make MP3 players at the time, and a whole bunch of other stuff. So just because 3M makes N95 masks does not mean you should buy into the company, because this is not their only product. They make a whole bunch of other stuff. They make adhesives, double-sided tape, a lot of different products. So I think if you're looking for a pure N95 type mask play, you might look for APT. This is Alpha Protect. However, I have to warn you guys against this stock because it's so extremely volatile. Every single day you might see it go up and down 15%. So to me, the stock has ran up so much since the need for these N95 masks that it becomes a really risky thing. So this is not an endorsement to buy this stock or anything. I'm just pointing it out because, well, if you want to be really leveraged, right? You only want to do like a N95 mask play. That might be something that you might consider. Costco is another one I looked into because at the beginning of this, right, a lot of people are just lining up at Costco. They want to stock up on food, as well as a lot of different grocery stores and grocery store that delivers. After the initial surge of people buying, people are actually locking themselves down and they go, oh, well, you know, you have enough supplies already. They don't actually have to keep on loading up and going every single day. So after everyone got their supplies, the traffic at these stores is actually going down. Now, at first you might think, oh, Costco is gonna skyrocket because everyone's going there to buy their stuff. If you look at the chart of Costco over here, the stock price actually just kind of kept its value. It didn't actually go up or anything. So the idea of investing in something just because it suddenly got very popular, you have to watch out if this is going to be popular for a long duration rather than just a short surge. Pizza Hut is another one that I'm looking at. Now, you would think when people are staying at home, they're going to order out, right? So they're going to order pizza. Pizza tends to be like a type of comfort food, and the people that don't like to cook or doesn't want to cook, they're going to order pizza. However, Pizza Hut still dropped, and I think it's because of the massive unemployment numbers. When people are unemployed, they cannot afford to buy as much pizza, so they're just going to cut back a little bit. And if you have like 10% of the entire economy cutting back on ordering pizza, even things that are popular are going to go down in value in terms of the stock price. So far, we have 3.3 million unemployment claims just last week. This week, we have 6.6 million. Just for reference, we have 330 million people in the entire United States. 155 million are employed in 2018. It is estimated that we're going to reach about 40 million unemployment numbers in the next few weeks or so. This translates to about 25% of unemployed people, and if you have unemployed people, they're not gonna buy pizza. Another one that crossed my mind is Nintendo. Nintendo makes a game console, the Nintendo Switch. For Nintendo, these are basically the only thing they sell. So, and you think people are gonna lock themselves up, they're gonna buy a Nintendo Switch, they're gonna buy that fitness exercise game. So this is great and all, but it seems like any company that has a recent surge due to this lockdown, all that happens with their stock price is that it just kind of stays flat rather than drop like 20%, 50% like most other companies. So if you happen to be one of these companies or you own them, well, okay, you're not gonna lose all that much money. This is great. But it's not to say that you should go ahead and buy into these companies, because if you did and you bought it at the beginning of this downturn, right at the end of February or whatnot, for most of these stocks I'm talking about today, you think that they're gonna go up 10% or something, but instead they went down a little bit, just a few percent instead. So buying into these things that appears to be very popular, it turns out it's not a great investment after all. If let's say this infection just keeps on going on, we're gonna get more unemployment numbers. The whole economy is gonna sink. So even if you have some of these companies that are doing pretty well, they tend to drag down these companies as well. So maybe these stocks is not gonna get hammered, they're gonna just stay relatively flat. So it's not actually a very good investment opportunity for most stocks out there. Some people might think, oh, you should invest in Netflix right now because if you're shut in, people tend to watch a lot more Netflix. And yes, the traffic has gone up a lot, so much so that over in Europe, they actually have to change the high definition streaming all the way down to standard definition, so they're not using as much bandwidth over there. Now, if you ask me, if they switch my high definition Netflix all the way down to standard definition, I kind of want to pay standard definition price for this, right? But anyway, at the beginning of this lockdown, if you thought, oh, everyone's gonna go buy Netflix, they might just start to sign up for this even if they never had Netflix, and then they may stay with this subscription. And if you think so, yeah, maybe that might be true, but you may lose more subscribers due to the unemployment numbers. So in the end, if you bought Netflix at the beginning of this infection, you probably didn't make all that much money. Now, another one is Amazon. You think that when people are staying home, people are gonna order a lot more stuff. Maybe they get bored, they're gonna go online shopping. One of the things that is in super high demand is the online groceries segment of the market. Amazon has something like this. However, it's like they are very, very limited on how much they can deliver. They can deliver as much as they can, and their delivery people limited. If you think Amazon's gonna go up, well, people keep on getting infected at their warehouses. So if this is going to limit the amount of throughput that they can just send those packages out of. So again, it seems like many, many businesses are affected, even Amazon warehouses, so then they can't ship out those things as much as full capacity. So other than this point, you can imagine if there's a lot of unemployment numbers and it goes down, the economy goes down, people are not gonna order as much stuff. So Amazon is not immune to this infection either. Another one I want to talk about, which is counterintuitive, which is gold. You don't actually have to buy the physical gold. If you just want to like buy a fund, you can buy GLD. And coming up to this infection, you can see gold increasing in price. However, during the massive scares, sometimes gold does go down. You would think that if there are massive scares and people think that economy is going to go down, that the gold would just keep on going up. But no, sometimes it goes down as well. And I think this is because sometimes if it's really, really bad, people need liquidity. They look at their gold holdings and they go, oh, I need some cash. So they sell some of that in order to, I guess, remain solvent, right? If they have a whole bunch of rent due, their stocks went down and they need cash. Maybe they're trying to raise cash to buy more equities. So I thought this was a very interesting thing that the gold price actually dropped so much. Sometimes when you go into this infection type thing, you have certain conceptions about where the stock market is going to go. If something is going to be really, really popular, maybe even short term, you think of investing into it. In hindsight, after looking at all these stocks, it is kind of not a really good idea to invest into Costco because it went down anyway, Amazon went down anyway. A lot of these things that became very popular, Netflix for one as well, they didn't really earn you all that much money if you bought it at the beginning of March. So what probably would make you a lot of money is if you had the foresight of saying, well, one of the worst things that's going to happen is airlines and cruise lines, right? Then if you happen to know this with some clairvoyance or whatnot, then you would have shorted those stocks and then you would have been a genius investor. For me personally, I kind of look at all this as a learning experience. I take all of this and I just kind of digest it because when something like this happens next time, I can go, okay, just because it surges in popularity does not mean that the stock price is going to go up. You need a constant surge and you need this surge to last for a really long time. Not just because the infection is here, because the infection could go away one day and all of a sudden that demand is just gonna disappear. Now I also need to talk about Zoom, okay? This is the video conferencing app. This video conferencing thing, I would have to say I have never used it myself, but I do know that a lot of workplaces like to use it. And with a lot of people working from home, people are gonna use this thing. But Although they're probably gonna get a lot of people subscribing to it, the companies are gonna pay more because they have a lot more users or whatnot. I can see what happening is that the entire economy might get dragged down. Then the company is gonna lay off people. Let's say they lay off half their force. Then they're not gonna need to buy this Zoom subscription for half of their employees that they used to need to buy before. So even though this product might be very popular now and a lot of people are jumping on it, if the entire economy goes down, I can see this stock being dragged down as well. This is the same idea across all these stocks I've talked about in this video. So thanks for watching this video. Don't forget to give me a like, comment down below. Let me know if you thought of the same thing on these stocks, or did you buy into these thinking that they're gonna go up? Comment down below, let me know. And as always, push that subscribe button and ring that bell icon. Thanks for watching.